Welcome to the Cryptoteacher. And guys, I come back with that video just to make you think. And of course, we're going to listen to Jerome Powell. I'll be back.
Obviously, it's for Congress to decide the timing, size, and components of further fiscal support for the economy. And I will say that the support provided by the CARES Act was absolutely essential in supporting the recovery that we've seen so far, which has generally exceeded expectations. And I do think it's likely that further support is likely to be needed for monetary policy and fiscal policy. I just mentioned the two risks that I think we face, and those would be well addressed through more fiscal policy. One is the further spread of the virus, and the other is the lapsing of the CARES Act benefits and the savings on people's balance sheets that will dwindle. But so on your first question, we'll take into account all external factors and do what we think we need to do with the tools that we have to pursue our goals. That's what we will do. And I've said it on a couple of occasions that will go better and move more quickly if we have a broad set of policies from across the government. And we've said this from the very beginning. It's really first and foremost healthcare policy, getting the spread of the virus under control and working on therapeutics and vaccines and that kind of thing. Those are absolutely critical to the economy now. Those are important as well as health policies. They're going to be critical to the economy. Fiscal policy can do what we can't, which is to replace lost incomes for people who are out of work through no fault of their own. And then what we can do is we can obviously support financial stability through our lending programs, and we can support demand through interest rates and asset purchases and that sort of thing. So we're going to take the economy as it comes, including all external factors. So I think all of us lived through the experience of the years after the global financial crisis, and for a number of years there in the middle of the recovery, fiscal policy was pretty tight, and I think I just would say that I think we'll have a stronger recovery if we can just get at least some more fiscal support when it's appropriate. When it's appropriate and in the size Congress thinks it's appropriate. I do think that will likely. And by the way, you see a lot of discussion on both sides of the aisle, on both sides of the hill, that suggests generally that there will be something.
Jerome spoke about the CARES Act and the C word, guys. What's not spoken about is that H.R. 748 was already in flow July of 2019, well before the C word. What they did was they strike that bill down, gutted it out, and put in the CARES Act. So they were already prepared. Remember, guys, I went over the simulation. They already knew what they were going to do. This was prepared last year. Now, don't forget we had interest rates going into 2020. So basically dropped us down to 0% interest rates, and then also did what? Changed the Volcker rule.
Let me say we do think that the facilities have generally served their purposes well, particularly in supporting the flow of credit, particularly acting as backstops to private markets. So overall, we think that the programs have gone well. In terms of the extension, we are just now turning to that question. We've had a lot of things to work our way through. Right now, we're just in the process of turning to that question and have, of course, not made any decisions. And in terms of the process, this is a decision that, of course, we have to make and will make jointly with the Treasury Department. To be appropriate, right now, we like the job it's doing. We could, if the facilities are extended, we could certainly look at new facilities. If things deteriorate, that would be the case where you'd want to maybe continue the facilities and maybe change them and maybe have new ones. Who knows? But certainly the facilities have been doing a lot of work and been very successful, I think, overall in accomplishing that job. So I do think there are things that we can do. But remember, we've always said this will take a whole of government approach, including healthcare policy and fiscal policy too. So it really is, if you want to get the economy back as quickly as possible to where we want it to be, then really it should be all of government working together.
We just listened to Jerome Powell speak about the repo facilities. I've done about 5 videos on the repo facilities. Guys, we know they did 11 repo facilities. We know they're coming to an end. Remember, the date is December 31st, and that's why he stated we're now in talks to see whether we're going to extend that. This is so important because we know if they don't, we know what happened. Remember, the repo market started overheating September of 2019. That's when they rolled in the C word and they started doing 11 repo options. Remember, the C word was to stop this physical currency because the repo market was going out of control.
I would say that the larger corporate market-based lending program has been very successful without making a single loan. I think unambiguously has been a big success. I think the state and local government program has also restored market function so that whereas there were the sort of individual investors who wind up funding loans in the muni market through mutual funds, they had withdrawn a lot of money, and we've had many weeks consecutively, I believe, of inflows there. And you're largely back to a normal functioning market. I think that's also been a success. I think certainly the funding market programs have been a big success. The Main Street is just a bigger challenge than all of them. Reaching out to small and medium-sized businesses through the banking system, which we had to do, is quite challenging. I do think, the grant programs, the PPP, were a great way to reach smaller companies. What you hear out there is that demand. You talk to banks and they'll say demand for loans is very, very low right now. Companies are not borrowing, and the reason is that the activity's at a relatively low level. They don't want to run up their debt. We put an awful lot into Main Street, and it is very challenging to reach a lot of those companies. But I think we are reaching many of them now, and I hope that the new changes will help us reach more. Absolutely critical in our system of government. The job of taxation and spending goes to people who have stood for election and been elected, and that's the way it should be. They have to be responsible to the electorate. We have a specific, job to do with a specific set of tools to support maximum employment, stable prices, financial stability, help the payment system, supervise banks, all the things we're assigned to do. But we're not going to get into financing the government. And by the way, when we buy government bonds, it doesn't actually, as you probably know, doesn't change the amount of government debt outstanding. We issue a reserve to purchase a Treasury security, and that's just another form in the consolidated balance sheet of the federal government. That's just another obligation. You change the nature of the obligation, but not the total quantity of debt that the government has when you do these asset purchase programs. So I don't.
If I could follow up, there is a suggestion that you buy state and municipal securities directly in the same way that you buy mortgage-backed securities, providing then cash to municipalities that are cash-strapped at this point.
Well, we're doing that with the municipal liquidity facility now. So we're buying. With our own funds and with the CARES Act funds that we've gotten through Congress and the Treasury, we're buying municipal securities of up to 3 years. So we're doing that now as part of an emergency facility under Section 13.3, which has to meet the emergency requirements of exigent circumstances, and which is all clearly laid out in the law. So we're actually doing that now. But I see that what that is from our standpoint is a rare thing that we do under Section 13.3 when regular intermediation in the capital markets or in the banking system has broken down. It's no longer working. So we step in under 13.3 and we provide liquidity. What turns out to happen is we announce a program and the market starts working. So we only actually have to do a backstop. The amount of financing that's happened in the municipal markets this year is much higher than it was the prior year, and we didn't do it. We've done a very small number of loans, but just the fact that we're there as a backstop seems to get the private parties to get back together and get the market working again. So that's what 13.3 is for. That shouldn't be a permanent thing where we're just another federal financing agency that's available to direct credit to very worthy borrowers. That would be more along the lines of a GSE. That's not what we do. We're there to provide emergency liquidity when intermediation has broken down, and then to pull back on that when, as the markets normalize, we pull back and we put those tools away, as we did after the global financial crisis and as we will here when the time comes.
Now, we just heard Jerome just say that they bailed Main Street out. Main Street is not having a problem. The reason why is because they're giving the cronies all the money. He just admitted that. So we know that before the collapse, these big companies were buying back their own stock. That's the only reason why they were trading at 13 times earnings. And then they got no interest rates. And then plus the Fed started buying their shares. And now a lot of them now are trading 30 to 36 times earnings. So that's the reason why the stock market is so high. We know it's all inflated by the Fed. The Fed bought everything. Now he said something very important about small business. What did he say? They don't want no loans. Of course, you don't want a loan if you're not even making any money. What sense does that make? What he didn't say is that if you did borrow $50,000 or below, then they came out, of course, months later and stating they were going to give forgiveness. So instead of just go ahead and make sure the small business qualifies, I'm not saying just hand out free money, but make sure these businesses qualify for these loans and give them forgiveness. It only made sense. You shut down the world for a flu that you know that was a hoax because you just gave your crony friends trillions of dollars. It only made sense, guys. Now, the last statement he made was very, very important, guys. He said, bonds, yes, we're buying these bonds. Of course, we know it's not them buying. We know it's BlackRock buying the bonds. But he said it's just a restructure. It's not taking away the debt. So what do we know? They're holding it to let it go, guys. Same way we have China that has all of our debt. They just holding it to let it go. So that's how the China empire comes to the top. And, of course, the United States fall to the bottom. Y'all have a wonderful day.